one needs to remember that there are different types of investors. There are purely financial investors, and the way these guys look at the markets, they look at Ukraine, they look at China, they look at Indonesia, they look at Turkey, and they decide on the balance of their risk appetite versus return. So that's basically their decision. And we need these investors as well, because we need people to believe in this market, we need money to finance the development of the country, etc. But there is also another group of investors which are probably as important, if not more important for Ukraine, and these are what is called the strategics. And these guys come here either because it's a fairly large market, so if you're a Coca-Cola, you cannot ignore. And if you're a Pepsi, you're going to come next, if it is a 35, 38, or whatever we are these days. If you are in any way in the agricultural commodity trading, and Sergey is here, an expert who could tell you more, if you're a Cargill, you cannot ignore Ukraine. You have to be here. And you will be investing, you will be finding a way to invest, but what Ukraine needs to do is to create conditions for these guys not to leave the country. That's the worst thing that happens. An investor that comes and then leaves. It is very, very difficult to bring them back. Case in point, good example, Rabobank. Rabobank came here in the 90s, got severely burned. It's an agricultural bank that has to be in Ukraine. But for them, it is so difficult to come back because they were already burned. So different types of investors, strategic versus financial, those that are already here and would like to invest more and are investing, don't bother them, don't harass them, be nice to them, love them. Because not only they put their money here and created jobs, but they're also our ambassadors. They're ambassadors that go back to their home countries and say, Ukraine is a good place to invest.
I just have one comment. I think the large-scale investors, the strategic investors are very important. But if you look at any economy which has really developed and created a growth, productivity, and employment force, it is a lot of the family offices, the family businesses, even in Germany, 50 to 60% businesses are still family-owned. So to attract these family-owned, medium-sized investors who have a long-term strategic viewpoint and who really plow both their knowledge and their capital into an economy, you have to create the right framework, the right structural reform. Otherwise, because they don't want to lose their capital. And these are the investors who would come in very readily to take those risks which are necessary. The family offices, not the private equity funds, because the private equity funds get money from LLPs, they have to convince all of them, but the family offices are now competing with the private equity funds. Their risk appetites have increased, so they're willing to take more risk and for the right opportunities. So there are lots of family offices now in Europe which are competing head-on with private equity and investing their capital, and they're large family office funds.
Big part of job should be done by the state, but my message is that we as a private sector, to create these capital markets, we must do a very big job as well, because we must show competitive projects to the investors which can compete with the same project and the same industries in the other countries. And believe me, so far, it's very, very few. So it's a challenge for business.
No, definitely. I think the country is interesting. The people are trained. There's a skilled workforce, and you can see an excitement and enthusiasm. And why not? So we're always looking for investments, and we are used to investing in emerging markets. We have a large investment in India, so we are willing to take risks. We understand the risks. We have taken quite a bit of risk in Russia. We have a large company going on in Russia in cooperation with EBRD. So yes, we would be willing to invest.